Hey everyone, welcome back to the channel. Steve the Panda and I are here again to help you master your finances. And today we're diving into one of the most important, yet most misunderstood topics for young adults. Credit. If you're a student, you might think building credit can wait. But here's the truth. Your credit score can affect your future in ways you don't even realize. From renting an apartment to getting a job or buying a car. And the earlier you start building good credit habits, the better. So let's get into the class's top 7 ways to build credit as a student. With real tips, fun facts, and things Steve wishes he knew at 18. Top 1. Open a student credit card in 2022. A survey by Sallie Mae found that only 35% of college students owned a credit card. Yet among those who did, their average credit score was 42 points higher by the time they graduated. Steve remembers a classmate, Amira, who used her student card strictly for transportation, metro passes, Uber rides, and bike rentals. She set it to autopay each month and never missed a payment. By senior year, she had a credit limit of $5,000 and an excellent credit score, while many of her friends had no credit at all. Little habits like putting one recurring subscription, like Netflix or Spotify, on the card and paying it off can build years of good history effortlessly. Even if you're not spending much, just having the card and using it regularly builds a history. Some cards even include tools to help students learn about credit scores and track spending in real time. And guess what? Many cards now let you add your student email for instant approval boosts. Steve always says, swipe wisely, pay fully. It's not about buying more, it's about building habits. Getting your first student credit card is like getting your learner's permit for driving. It's your entry into the world of credit. Banks and credit unions often offer cards specifically for students, with lower limits and no annual fees. Why does this matter? Because the length of your credit history is a big factor in your score. The earlier you start, the better. Even if you just use your card to pay for groceries or Spotify and pay it off in full each month, you're building a track record of responsible use. Fun fact, according to Experian, people who open a credit card before 21 and use it responsibly tend to have significantly higher scores by age 25. Steve recommends starting with cards like Discovered Student Cashback or Capital One Journey Student, which also offer rewards and cashback, so you're building credit and earning perks. Top 2. Become an authorized user. Did you know that FICO scores count the age of the oldest account in your file, even if it's not yours? That's why being added to a parent's 10-year-old card is powerful. Steve's cousin Malik was added to his dad's account, which had a $15,000 limit and zero balance. Within 3 months, Malik's score jumped from 604 to 728. The best part? He never even touched the card. Just the account being in good standing gave his report a strong foundation. It's one of the easiest ways to get a credit jumpstart. No applications, no hard inquiries. Some parents may hesitate, but remind them that you don't even have to get a physical card. They can keep it. You're only benefiting from their responsible habits. Many students see a 50 to 100-point boost in less than a year using this strategy. Steve adds, ask to be added to the oldest card available. The longer the history, the stronger the impact on your file. This is one of the easiest hacks in the credit world. Become an authorized user on a parent's or family member's credit card. What happens is their positive payment history gets added to your credit file. If the account is in good standing and has been open for years, you can instantly gain years of credit history. It's important to note, you don't even have to use the card. Just being listed as an authorized user can be enough to impact your score. According to FICO, over 15% of Americans aged 18 to 24 saw a score increase within 6 months of becoming an authorized user. Steve did it with his uncle's card and went from no score to 705 in a few months. Just make sure the primary user has good credit. Otherwise, it can hurt more than help. Top 3. Always pay your bills on time. According to CNBC, a single 30-day late payment can remain on your report for up to 7 years, even if you pay it off later. The psychological impact is also real. Missed bills create anxiety and distrust in lenders. Steve once forgot to pay a utility bill when he moved out of his student apartment. He didn't know they had sent it to collections. When he applied for a rental 2 years later, it came up and almost cost him the apartment. Lesson learned. Set up reminders before the due date and always double-check that your mailing address is updated. Some landlords, internet providers, and utility companies report unpaid balances even if they're small. If you struggle with dates, set up payment alerts via Google Calendar or your bank's app. And if you can, try paying twice a month. It lowers your utilization and ensures you're never late. Fun story. Steve once paid 2 hours late and still got dinged because the cutoff time was 5 p.m. So always check your issuer's terms for exact timing.
This one might seem obvious, but it's the most powerful factor in your credit score.
Payment history makes up about 35% of your FICO score. Even one late payment can drop your score by 50 to 100 points. That's enough to raise your interest rates, get you denied for loans, or lose apartment applications. Set reminders. Use AutoPay. Link your calendar. Whatever it takes, pay your credit card bill before the due date. Steve once forgot a $14 phone bill, and his score dropped from 710 to 662. It took him 8 months to recover. Fun fact, credit scores don't just track if you pay, but when. Paying early, before statement closing, can help reduce your reported utilization too. A double win. Top 4. Keep your credit usage low. Most people think paying off their card monthly is enough. But credit bureaus look at how much you owe at the time your statement is issued, not at payment. That means if your balance is high on the report date, your score can drop temporarily. Steve's friend Fatima always used her credit card for groceries and paid it off each payday. But her score stayed stuck at 680. After switching to paying before the statement closed, her score jumped to 740 in 3 months. Tip: if you need to make a big purchase, consider splitting it across 2 cards or paying part with debit. Some experts recommend staying under 10% utilization for the best scores. And even if you pay in full, the balance reported to the bureaus could still be high if you wait until the last day. Consider paying early or multiple times a month. If your limit is low, call your bank after 6 months to request an increase. It's often automatic if you've paid on time. Here's a credit trick few students know. Using too much of your credit limit can lower your score, even if you pay it off every month. This is called credit utilization ratio. Ideally, you should keep it below 30%. So if your card has a $1,000 limit, try not to spend more than $300. If you regularly go over 50%, lenders may think you rely too much on credit, which is a red flag. Steve's tip: if you need to buy something big, split it across cards or ask for a limit increase after 6 months. It's not about spending less, it's about appearing responsible. Fun stat: people with scores above 750 typically use less than 7% of their available credit. Top 5. Start paying small loans. Early, most people associate loans with debt stress, but small installment loans are one of the best ways to diversify your credit profile. One clever strategy is taking a $500 credit builder loan from your local credit union, where the money is locked in a savings account until repayment is done. This builds savings and credit. Steve once used an Affirm plan to buy a refurbished MacBook for $800. He chose the 6-month plan, paid ahead by 1 month each time, and avoided all interest. His score increased by 37 points after the final payment. Installment credit shows lenders you can manage predictable, regular payments, a key trait they love to see. Many credit unions offer credit builder loans, where they hold the money in a savings account while you pay monthly. At the end, you get the money and a boosted credit history. Think of it as training wheels for loans. Another great tactic: take a small buy now, pay later plan, like Affirm or Klarna for a laptop, and repay it early. It builds installment credit without massive risk.
Loans can actually help you build credit if used wisely.
Let's say you have a student loan, or you took a small personal loan to buy a laptop. Each time you make an on-time payment, you're building your credit history and showing lenders you're reliable. Bonus tip: try to pay more than the minimum when you can. It reduces your interest and shows discipline. Steve once took a $1,000 credit builder loan from a local credit union and paid it off in 8 months. It boosted his score and taught him good habits. Lenders love to see a mix of credit types: revolving, like credit cards, and installment, like loans. Having both is like having a balanced diet for your credit profile. Top 6. Use rent reporting services. Less than 10% of renters have their payments reported to credit bureaus, even though it's often their biggest expense. Companies like Boom, Rent Reporters, or Level Credit allow you to connect your lease and banking info to verify payments. Steve helped his roommate sign up, and in 8 months, his roommate went from no file to a credit score of 681. According to a Harvard housing study, 63% of young renters under 25 could benefit from adding rent to their file. but they don't know it's even possible. Bonus: some services let you backdate rent for the last 24 months, which is like gaining 2 years of history instantly. According to TransUnion, renters who reported their payments saw score increases of up to 60 points over 12 months. It's one of the fastest ways to build non-traditional credit. Bonus tip: some services let you backdate your rent history up to 24 months, giving you an instant history boost. Rent is often your biggest monthly expense, so why not make it work for your credit? Normally, rent payments don't appear on your credit report, but with services like Experian Boost, Rent Track, or Self, you can report your rent history and get it counted. Steve used a rent reporting tool while living in his college apartment. After 6 months, his credit jumped by 42 points. These services usually cost a few dollars per month, but they can be a game changer if you have limited credit history. Also, landlords are starting to adopt systems that auto-report rent. If yours doesn't, you can ask them or use third-party services. Top 7. Monitor your credit regularly. Think of checking your credit score like checking your bank account. It's not just useful, it's essential. Steve once found a credit inquiry from a bank he'd never heard of. Turned out someone had tried to open a card in his name. Because he caught it within a week, he froze his report, contacted the bureaus, and avoided identity theft. Pro tip: most monitoring apps also offer simulators, tools that show you what happens if you pay off debt, increase your limit, or miss a payment. It's a great way to learn how credit works in real time. Set a monthly ritual. Steve's is First Sunday eCredit Day. Review, adjust, and set one credit goal for the month. Use credit monitoring apps not just to check scores, but to understand your full credit profile. Look at your age of accounts, total debt, number of inquiries, and types of credit. Steve's monthly routine. First Saturday of every month, he logs into Credit Karma, checks his progress, and celebrates small wins, like paying off a bill or reducing usage. You can't improve what you don't track. Use free tools like Credit Karma, Credit Sesame, or your bank's app to check your credit score and activity regularly. Look for any errors, suspicious activity, or missed payments. According to the FTC, 1 in 5 people has a mistake on their credit report. Steve caught a $65 medical bill in collections that he never received in the mail. Because he spotted it early, he was able to dispute it and protect his score. Set alerts. Review monthly. And don't be afraid to contact the credit bureaus, Experian, Equifax, TransUnion, if something looks off. Wrapping up, there you have it. The top 7 ways to build credit as a student. To recap quickly: 1. Open a student credit card. 2. Become an authorized user. 3. Always pay your bills on time. 4. Keep your credit usage low. 5. Start paying small loans early. 6. Use rent reporting services. 7. Monitor your credit regularly. Remember, building credit is like planting a tree. It won't grow overnight, but if you start early and stay consistent, you'll build something strong that will support your financial future. Like this video? Smash that like button, subscribe, and let us know in the comments what step you're going to take this week. Steve and I will be back soon with more tips to help you level up your money game. Until then, keep building, keep growing, and stay smart.